the 23rd of April 2025. Right, so what's in store for us today? Right, today, I'll talk a bit about crypto. Is crypto still expected to move higher? Um, the funny thing is that I wrote about this crypto thing even before we saw that 7% up move in Bitcoin last night. So let's see whether this thing is ready, to move even higher, right? So at a glance, at the current macro environment paints a grim picture. Tariffs are surging, small businesses are on the brink, and liquidity across financial markets is rapidly evaporating. From frozen junk bond markets to stalling bank loans, the economy seems to be caught in a tightening grip, right? We all know this. But beneath the volatility, a new question is quietly taking hold among investors, builders, and institutions alike. Is crypto, especially Bitcoin, still expected to move higher in this environment? The answer, surprisingly, may lie not in price charts, but in structural shifts happening beneath the surface. Okay, it's just not about, we need to know the fundamentals behind. So first of all, macro headwinds, market freezes, and liquidity crunch. This is something that we are facing right now. Now, global markets are teetering. Tariff threats have chilled deal making, frozen small business activities, and gutted liquidity in some of the most liquid asset classes in the world. Bond auctions are faltering. Small businesses, especially those dependent on Chinese imports, are now showing signs of distress. Now, geopolitical tensions as well, led by aggressive tariff policies, are distorting supply chains and clouding visibility for entrepreneurs. Some, even within the pro-tariff camps, are voicing concerns. We have addressed that in a previous report, not about goals of reshoring, but about the abruptness and lack of transition time. Meanwhile, the US fiscal deficit, debt service burden, and bond yields are converging into a perfect storm that's testing the resilience of the current financial systems. Now, the trigger for the next move, what happens next hinges on two outcomes, right? Either a temporary tariff resolution with China or the injection of liquidity into markets to prevent a cascading economic freeze. Both are plausible and both have precedent. Okay, so it's so coincident when I wrote about this, yesterday, the Treasury Secretary this last night gave an update saying that they are negotiating with China, and tariffs will be much lower than the current 145%, because 145%, you can put it straight away, this word embargo, okay? Because there's no business going on between, so it's an embargo already. But don't think tariffs with China will go to zero. I don't think so. There's no way that's going to happen, But probably what you're going to see instead is something less than 145, north of zero, but we don't know. Okay, probably, if it gets a good number, that's a good thing. But with Trump, anything can happen. Now, the only thing is that this is being mentioned by the Treasury Secretary, and Trump, you know him, he can just turn things around and say otherwise. But whatever it is, let's just wait and see. This definitely tariff resolution with China is a step forward, either that or injection of liquidity. So in either case, capital will need a place to go. And historically, when uncertainty peaks and liquidity reappears, hard asset benefits. That includes gold and increasingly Bitcoin. Okay? This is something that we need to understand. So Bitcoin right now is a macro hedge. Bitcoin is no longer something for risk takers or tech enthusiasts. is now seen as a way to measure how unsure people feel about the economy and how much they trust the people in charge. So since central banks can't raise interest rates much more without causing bigger problems, Bitcoin's biggest strength is that it isn't controlled by any government. Some experts think Bitcoin could hit a new all-time high by the end of the year, not by just because of the charts or the ETFs, but because more people now see it as a safe way to escape bad decisions by governments and financial systems. So when leaders have to choose between letting things get worse or printing more money, investors are starting to guess their moves early and many are turning to Bitcoin. So I see Bitcoin more like a quiet revolution, and the cryptocurrency is the Bitcoin and the cryptocurrency is definitely a revolution. And one particular aspect of this revolution is what we know as tokenization. So the Bitcoin narrative is only part of the picture. While price focus headlines dominate, something far more foundational is underway, the rise of tokenization. Why do I say that? If you follow the news of hedge funds and the cryptocurrency world, you will hear this word tokenization, because more and more, you're going to hear it more and more, because like institutional players like Hamilton Lane, a trillion-dollar asset manager, are actively tokenizing their private market funds. Their goal, make alternative investments like infrastructure and private equity accessible to everyday investors with as little as 500 US dollars, all while retaining regulatory compliance and governance oversight. Now, tokenization merges blockchain transparency with Wall Street's credibility. Now, this is a very, very important thing, all right? It's the infrastructural shift that could define the next decade of capital markets, much like ETFs transformed investing in the early 2000s. And this is a new financial stack. Why do I say that? Young investors under 35 are turning away from markets. They are simply building their portfolios differently. Public markets are shrinking, dominated by 7 tech giants and riddled with volatility. Meanwhile, the decentralized world, crypto, tokenized assets, smart contracts is expanding. So you're seeing more and more people actually moving towards a different kind of investment. So we are witnessing a migration, not an abandonment, okay, away from legacy systems and towards platforms that offer speed, ownership, and openness. Tokenized funds are not meme coins. They are digitized bridges to real-world value, finally being offered on the terms of a new generation. So it's basically creative destruction and decentralized resilience. So amidst all this, small businesses are being hit hardest. Tariffs, high interest rates, and unpredictably low policy are thinning out those built during the era of zero interest rates. Many simply cannot adapt. But this is also the essence of creative destruction, a term coined by economist Joseph Schumpeter. Old systems collapse, new one emerge. Now, in this cycle, the replacement may not come from government or central banks. It may come from decentralized networks that offer capital access, transaction efficiency, and trustless systems not bound by politics. Now, Bitcoin and tokenized finance are part of that response that we are seeing right now. So now the question is this, so will crypto go higher, right? That is the central question today. The answer is yes. If you zoom out, in the short term, catalysts like tariff easing, liquidity injections could send Bitcoin sharply higher. But the deeper case is more structural. Crypto is evolving from a speculative asset to an institutional tool and a financial infrastructure layer. Whether through decentralized stores of value like Bitcoin or through regulated tokenized funds, digital assets are becoming embedded in the fabric of modern finance. The answer isn't just yes. Crypto is not only expected to go high in price, it's expected to go deeper in relevance as well. Okay, so this is something that we know it will happen. It will happen eventually already. That's why I said zoom out from here. Okay, so with that, that's the report for today.